I spoke to some of the most successful and respected traders out there to find out how they became profitable. As you may have noticed by now, trading has been an over-glorified career path in the recent years. However, the reality of trading is that every successful trader was once a struggling beginner who made all kinds of mistakes. If you guys have been watching this channel from many years ago, you know the story of how I became the humbled trader. And you may have seen this parody video that I made about the Lamborghini traders. So in this video today, I want to present to you, and every developing trader, the reality of trading, what it really takes to become profitable. You'll be learning about the blood, sweat, and tears behind the success of these millionaire day traders. These millionaire traders have different trading styles and specialize in different trading strategies, from trading the low-float small-cap stocks to trading futures markets. There are some common themes you'll see in this video. These pro traders, they all had humble beginnings, and more importantly, they experienced big losses that helped them realize that they really need a trading process with discipline and proper risk management. So, are you ready to learn from our first millionaire trader? Please remember to smash the like button if you support real talks and realistic trading content that will help you mature as a trader. Okay, let me introduce our first trader, Eduardo, who is famously known for his shares recycling strategy and his contribution to the Spanish trader community. Eduardo's story began as an immigrant from Venezuela. I have a lot of respect for his honesty and transparency in sharing his emotional experience of going through the drawdowns and how he eventually recovered. His insights on sizing down with proper risk management and how to face your emotions and discipline will be very helpful for developing traders.
So how many years did it take for you to eventually become profitable? And was that after you moved to the States?
Yeah, it was after I moved to the States because I had in my mind, I was like, okay, I can make this amount of money and I could move to the States and I could live, if I can make this amount of money on a daily basis, I could, survive.
Yeah.
And obviously I, blew a couple of accounts more trying to do that.
Yeah.
Because of I think if you treat trading as a survival mechanism or as a survival income, it's gonna be so hard for you.
It's very difficult.
Rather, if you treat it as a growing mechanism, like if you supplement your income and if you get this skill as not to pay the bills but to grow maybe get your standards higher or something like that, it's going to be so much easier for you. But if you get that pressure of trying to pay rent, you're not risking, $2,000. You're risking your whole rent. Mm-hmm. That kind of feeling will cloud you from the decisions that you need to take. And that's why I think it's so important to detach from money.
Yeah, I agree with you. And I often kind of describe it as two phases. There's a going to school phase, which all the traders, like I did it, you did it, we have to go through. When you're going to school, you're not worried about, making a career out of it. You're just trying to learn the best you can and find out what your edge is, what strategies work for you. And once you can start making like $10, $50 consistently, then that's okay, I'm making money consistently, I can use it to pay bills. That's like the second phase. I think a lot of people try to do both at the same time, and that's why they sadly ultimately fail.
Totally. And you know what? That's why you have to start with small kind of money. Because if you start, because we try to, the time that we invest in trading, we try to make it worth by getting paid.
Yeah.
And that's why you bet so much at first. But then if you realize that first 2 or 3 years, maybe, it's going to be like a school for you. It's going to be like developing the skill. You're going to see it in another way and you're going to be betting $1. I don't care. But the commissions, but you don't care. If you lose $1,000 your first year, that's a huge win. Like a huge win. And people are like, no, but I have to get paid this amount of time that I invested in this thing. And they don't realize that this career can probably last 20 or 30 years.
Yeah. I think that comes with you need the right expectations as well. I think a lot of people unfortunately dive into trading thinking they are going to make it work in 6 months, and they are not giving themselves enough chance by doing so.
Totally. Managing the expectations, I think that's key. And if you see it this way, if you see it like, okay, I'm making a career as a doctor or something like that, you'll be going to school like 8 years.
Yeah.
You know, and this thing, you're giving it, 6 months? Like you won't give being a doctor 6 months and that's it. You'll give it more time. Why you should give trading, which is probably one of the hardest, professions there is, not because of the markets are difficult, it's because of that's a war between you versus you.
Yeah.
So it's a matter of developing the skill more than making money out of it.
So when you started making money, small amounts consistently, what do you think was the process for you? Or were there, a couple things, 1 or 2 things that you really focused on and honed in during that process to make you realize maybe it's not one click, but you finally realize, okay, if I repeat the same process, I can make money consistently. What was the process
I think
for
it's
you?
a matter of habits more than it was like a click for me.
Yeah.
It was a matter of going to the same process over and over again. And I realized that I could make money every single week if I stick to that process. So I had to become really, cause that's why I think I have such a unique trading style. It's just because I couldn't afford to lose money back then. And with trading, not to lose money, that's crazy. But I managed to get this trading style based on risk management, that it was really, really good on protecting my gains, in a way. So yeah, totally. It was a matter of process. It was a matter of, sitting down on the computer, making a watch list, making this criteria for each stock. And you know what? Obviously, being in the right moment, like the market of 2020 was a blast for me. And it was crazy because it was and many people were like devastated because of that. And I was so blessed because that market was so perfect for the way I traded that I capitalized myself thanks to that market. And I think that's key. Sometimes we have a process, like a perfect process, but if we're not in the correct environment, if we're not in the correct market in order to apply that process and push it, we're not going to be able to make money. So it's a matter of keeping the process, so when the market environment sets in, you get to push it. Because if you trade the same way that you traded a year ago, you know that you will lose a lot of money. So you got to be better in order to be the same in money-wise. So you got to push yourself in order to become better in that risk tolerance kind of part of your trading.
I know just earlier you mentioned the importance of downsizing when you are going through a drawdown, just to kind of recollect yourself, regain your confidence, and kind of, like you said, like when you were losing 10,000, you size down, now you're risking 3,000, you can actually trade better, right? So I think a lot of newer traders, they tend to do the opposite, where they're in a drawdown, let's say they are losing $1,000. They're sizing even more so they can make that $1,000 back.
So they can recover it. And you know why? You know what? See it this other way. When you're winning money, you got to push it more.
Yeah.
People don't. People size down when they're winning money because there's so much fear to lose the money that you're gaining.
Yeah.
And it's so much urgency to gain back the money that you're lost that you got to backwards. When you're earning money, that means that you're in sync with the market. So that's why I'm telling you that my equity curve will dictate my size. If my equity curve is up on a month, I go and
that makes
size up.
sense. Yeah, that means you're trading well as well.
Of course, and you're in sync with the market.
Yeah.
If you push it, you get uncomfortable. That's where, things start happening because you're pushing it and psychologically you're not making the best decisions, you might get a drawdown. What does your P&L tells you? Size down. That's why it's really important that people understand that if you're in sync with the market, go for it.
Yeah.
Maybe not risk all of what you gain, but you got to risk more so you can take advantage of your synchronization with the market. If you're losing money, stop losing money.
Stop risking so much. Yeah.
Stop the bleeding. There's a thing that I think personality is really, really important when you're trading.
Okay.
And I am kind of a guy that likes to be right because my confidence goes up, and that way I can perform better. So I'm a really an accuracy kind of trader. So if you see my statistics, I'm right like 77% of the times.
Okay.
But my risk reward sucks. Like my risk
so
reward.
you're aiming for high win rate.
Higher win rate.
I see.
Yeah. But when I'm teaching and when I'm being a coach, I always try people to aim for that 2-to-1. Because if you don't get the risk reward on your side, it's really, really hard for you to take advantage of the real opportunities. Like you'll see a lot of opportunities, especially in small caps and especially in the long side. Like there are so many opportunities that it's not a matter of risk reward even. It's a matter of, understanding what the stock is doing so you can squeeze everything, like maximize every single unit of risk that you're putting in. You got to maximize it. So as I trade every day, and like I literally trade every day since like my probably last 5 years, I would probably have lost maybe like 20 days on my trading. Like I trade every day. So I probably don't seize, like that's what I'm working on the most. I probably don't seize opportunity as I would. And that's why my risk reward, it's so lame. Like it's really, really bad, especially in the weeks that I'm really, really, this October has been like really, really bad for me. I still like managed to break even on the month. I don't know how, but if you see my risk reward is like 1 to 3 or something like that. Like it's
risk
really,
reward.
really bad.
Oh, so 3 to 1 risk reward.
Like I risk 3 units to gain 1.
Oh,
so bad. But I compensate that with the
high win rate.
With the high winning rate. But that means that I get so stubborn on some trades.
Yeah.
Lose probably 10, 20 grand on a stock.
I see.
But I gain probably 7.
Gotcha.
So that's something that I'm working on. And that's something that size did to me. Like the size, when I pushed the size, it was so hard to be flexible. The flexibility that we were talking about.
Yeah.
It was so hard. It was harder. And that's why I think I got into all those losses.
What's your biggest loss ever, if you don't mind sharing?
I don't remember quite well, but if I have to say, I probably have like 4 of probably the same amount. But the one that shocked me the most was SPI. Like shorting SPI was shorting that parabolic move. Like it was huge parabolic move back in 2021. And I remember that I was probably at the 35 or so. I did have a great entry, and it went all the way to the 60s. And it was... Oh, no. And I keep adding and adding and adding.
Okay.
It was so bad.
It's one of those, like what you said earlier, deer in the headlights events.
100%. It was so hard to... And that... I'm so grateful for that loss because it led me to ever short something like that again. And more than that, take advantage from them and flip on the long side.
Yeah. Instead of keep adding shorts, you should just cut your loss and go long.
Of course.
It's easier said than done, for sure. But I think
hard.
it's good that you are like kind of neutral. You're not too short biased. You're not too long biased.
I think if you haven't ever felt that before, you couldn't talk about it.
Yeah, deer in the headlights moment.
People think that it's so easy to say, hey, cut it. And if you see the other people doing it, you see them like digging their grave. You go like, oh, stop.
Right.
But when you are in that screen and you see that thing going against you, and it's just a matter of, as you know that there will be a pullback, you're like, I'll just wait for the next pullback.
Yeah.
And it keeps halting up, halting on. It's so powerful that I don't even know how to describe it. But if you feel that, you can understand whenever you see something like that again, you will know what the other side of the trade is thinking and feeling.
Thank you so much for sharing the recent drawdown you're experiencing. When you're going through kind of losses day after day, how do you deal with these losses? Because they slowly add up.
Yeah, I think it's really important that the first thing you have to do is see it as it is and not worse than it is. Because sometimes we get like, okay, I lost this kind of money. I'm the worst trader in the world. I don't like you get to question yourself a lot. And that's not it. That you just made a mistake. You just lost money and you could fix it. And whenever you approach that loss in that way, it's so much easier to deal with it than if rather you go like, yeah, I'm the worst trader in the world. How can I do that? Or am I good for this? Am I sufficient enough for this?
You want to quit, kind of.
Yeah, totally. Yeah. So it's not that. You made a mistake. You have to deal with it and see it as it is, not worse than it is. That's the first thing. And for that, you might take a walk or something like that to chill and to cool off all those crazy thoughts that you get. Then I think it's really important to reflect technically what you did wrong, so you can set your rules, because sometimes we bypass our rules just because we get away with it sometimes. Yeah. And rules are there just to avoid days like that. So it's really important that you reflect technically what you did wrong so this never happens again. And then it's really, really important that you focus on gaining your confidence back rather than money. And that's why sizing down is so important. That if you can get that good trade on the next day, it's much more important than getting all the money back. Yeah. Because if you get all the money back and you're not reflecting what you're doing, you're going to experience.
Yeah, you didn't learn anything.
You didn't learn anything. Yeah. So that's why it's really important for you to reflect, size down, and look for that confidence back rather than money.
Even though he is now a verified millionaire trader, Eduardo still approaches the market like a truly humbled trader. I put the link to the full podcast with Eduardo down below in the description, so you guys can learn more about his trading process and strategies in detail. Up next, we have a legendary trader, Jason Shapiro, aka one of the unknown market wizards. Out of all the traders I've spoken to over the years, Jason Shapiro is perhaps the most experienced. Despite all of his wisdom and extensive knowledge about market cycles, Jason is still very humble and is very open to sharing more insights with traders like you. This 9-figure futures trader will share his recent experience of practicing strict discipline when the market is not favoring his style of trading. Think about all the big losses due to the fear of missing out that you could have avoided if you understood your edge and the suitable market conditions for your strategy. Okay, now let's learn from the market wizard.
I usually have between like 3 and 7 trades on at a time.
Okay.
The last 6 months, I've had the least amount of trades I've ever had in my 24 years of doing this.
Oh, why is that?
It's just there hasn't been super crowded markets.
Really?
Right?
Okay.
Which, I look back over 23 years, I was out of the market completely a total of 2 months. I'm not talking about 2 months straight. I'm talking about a total in 23 years, 2 months. This year, I was out of the market completely for 3 months straight, which is hard, because first of all, I've never done that. Right? And the discipline, you're sitting watching the market every day and you want to be involved and blah, 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 the discipline is very hard. So this has actually been a great lesson for me in my discipline. How disciplined can I be to my process? But when I look back at it, it was phenomenal, truthfully, because you look at what again, going back to what I do, I'm creating a negative return stream to trend followers, right? Well, trend followers have crushed it the last 4 months, right? I mean, I see some of these big trend followers are up 30, 40% this year. I'm flat because I had no trades. So if I can be, from a what I provide my client point of view, if I can be flat while trend followers are up 30% and I'm supposed to be negatively correlated to them, that's a home run.
That's true, yeah.
And so the data has helped me to do that. It's hard to do in the midst of it, but the truth is, as I look back now, that data saved me. And I say a lot about the Commitments to Traders report, a lot about that too. It's not necessarily a better predictor of markets than anything else, but it's a great risk manager because it kept me out of trying to be contrarian, I could have been contrarian on cocoa, at 4,000 and it's now trading at like 9,000 or something, right? If I was just looking at price and if it was overbought and all that, I could have been contrarian, right? Which is what I would have done in my old days, okay, before I started using this data. But this data said to me, it's not crowded, so don't try to fade it. Don't be contrarian, right? Don't be contrarian price, be contrarian participation. So because the participation wasn't there, I didn't short it, and that has been great because it allows me a few things. When I do start getting trades, when markets hopefully do start getting crowded and do start turning, and I make some money, I will be making money from no drawdown. So it'll all be new profits, right?
Yeah.
Instead of, hey, okay, I draw down 5%, and now I make 5%. Well, now I'm net nowhere, right? I hate that.
That's true.
Right?
Yeah.
So it's hard, but it's been great. As I look at it, my client, I don't get paid. You know what I mean? March, the quarter's going to be up in 2 weeks. I haven't made any money this year. I'm flat. I'm not going to get paid this quarter. But it doesn't matter because when I do get paid, I'll be making new profits. So I will get paid. So people forget that. This game is about overtime. Everybody wants to make money today. Everybody wants to make money this month. You know what I mean? We all need money. We all want money, right? But this game is about overtime, and that's something that is very difficult to know and understand until time passes. I didn't know or understand that until 10 years passed. And I looked back and I was like, okay, I started doing this at 21. Now I'm 31. I'm no better off than I was at 21. In the meantime, hey, I bought a Porsche and then I had to sell the Porsche, and I bought a condo and I had to sell the condo. And, during it seems like you're doing great. But you pass 10 years and I'm like, I didn't waste, but financially I just wasted 10 years of my life,
Yeah.
But, I took the lessons and, I was dedicated to doing this. So I took the lessons and I moved on. It's hard for people, obviously, to accept these lessons, You have to go through them yourself, I feel like. I did. Not everybody has to. The smart people will listen.
Hopefully, yeah.
But most of us aren't smart enough to do that. Nobody. I always go back. I go, if I had listened to my dad, all the things my dad told me to do, I'd be much better off. You know what I mean? But I didn't. You know what I mean? None of us do, right? Some do maybe, but most of us don't, right? We want to break off and be our own person and not listen to our parents and learn our own lessons, right? And then you get older, you become a parent, and you learn that actually, I'm just trying to help you. I'm not trying to give you bad advice. I'm trying to have you learn the lessons that I have learned and try to stop you from having the pain that I had to go through. But my kids don't listen to me. I mean, they go through, you know what I mean? No one, it's just the cycle of life, right? And trading's no different. It's all psychology. So it's just the psychology of it all. But point being, it's an overtime game.
Yeah.
So you really have to decipher over time what's working for you trading and what's not. And there's a difference between what happened to work for you this time and what actually works for you over time. And only time can tell that. So
That's true,
it's a great idea to keep logs and keep diaries of your trades. I used to do it by type of trade. So I could then go back and say, okay, is this type of trade working for me? And if not, throw it away, right? Is this type of trade, almost like eliminating the things that aren't working, get you closer to the things that do work, right? That was a big thing for me. And again, if you don't write them down and keep a diary, you have a tendency to just remember. One book I read a long time ago, a guy used to call it faulty learning. you have a tendency to remember the one that worked. Hey, I did this
Yeah.
breakout trade and it was a home run. Great. But what about all the breakout trades you've tried?
That's true, yeah.
Has that worked over time or has it not worked over time? And don't just remember that one that did work and keep chasing that dream, right? If you've made 100 breakout trades, now you can go back and look at them. Hey, this one worked great, but truthfully over time that has not worked for me. So I have to eliminate that from my trading. I think that's a really important thing. And again, no one's going to listen, but I think it's an important thing if you really want to trade over a long period of time. It's an important thing to go through. And you will, whether you believe me or not, you will have this record. And the sooner you start a record, the better.
Yeah.
Because then you will have it. You can't go back and create the record, right? So if you have a record, then you'll have the data that you can go back and look at and really make an unbiased decision on whether what you're doing is working or not.
I think one thing you did mention that what you did in the earlier years is you were fighting the price. So that's what a lot of, I think when people first hear contrarian trading, they think about counter trend trading. So you kind of talked about the key difference there, right? So what would you suggest for traders who are kind of doing that same thing you mentioned earlier where, oh, NVIDIA is going up from like 500 to 800, so it must be a short.
500.
What would you tell them?
200 to 900.
Yeah, 200 to 900, yes.
Yeah. I get it. I get the psychology behind it. I have been there and I have lived it. Okay, I get it. You got to stop. And there's a few videos where I did that. I did some videos that were called like "Stop Shorting NVIDIA." Okay, and it wasn't about that I was bullish NVIDIA, and it wasn't about that I knew something about AI because God knows I don't. Okay, but my point is, if something is closing on an all-time high, stop being short. Okay, you can't be short something that's at an all-time high. You just can't. And almost, I'm not going to say never, almost never. And I have traded a lot of different assets in my life. Okay, almost never have I seen something close at an all-time high, and the next day it was down 40%. You didn't get a chance to short it. Right? It doesn't happen. You know, if you're going to be right, that's fine. But again, let the market confirm it first. It's not going to gap away from you. It's just from an all-time high. It's very rare that something's just going to gap down and run away and you're going to miss it, right? So miss if you think NVIDIA is a bubble and it's going from 900 back to 100, well, then missing the first 30 points ain't going to kill you, right?
Right.
But keep shorting it and losing 50 points 10 different times is going to kill you, right? And NVIDIA is just such an interesting one this year because in the last year and a half or whatever, it's been very interesting to me to watch it from a psychology point of view because everybody talks about NVIDIA. Everybody I know has been shorting NVIDIA.
Oh, really?
I mean, not that I know, but everybody I hear talk and everybody, that's been like the big trade. They want to catch the NVIDIA top, right? Because that's the bubble, right? And I believe that the reason for that is, I personally believe, you had 2021, COVID to sort of mid-21, which was a no-lose bull market, right?
Okay.
All you had to do was buy something. It didn't even matter what. And not sell it because eventually it was going up, right? Then you had late 21 and 22, where if you did that, you had learned that habit in 2021, you got crushed. And look, I went through the same exact thing when I started trading, okay? So now you got crushed. So now you want to play the bear side, which is what everybody did, in 23. They wanted to play the bear side. Oh, I'm not going to get stuck with this again. I learned my lesson. I was one of the suckers back then that got caught in these stocks, and this time I'm going to short into them. So now they shorted NVIDIA because they didn't want to be caught in all those stocks again, and it went up in their face, right? It's all positioning to me, right? That's what I'm saying, And if you can look at almost anything, you remember the big squeeze in GameStop, right?
Oh, yeah.
GameStop didn't go from being a crap company to being a great company, right? It went up simply because people were way, way too short, and they got squeezed. That was it. It had nothing to do with the change in fundamentals in any way, shape, or form, right? It was all positioning, right? And I can go through a million trades through my history where I can prove that, and I can show that. So you got to remember that, And if you're on a chat site and everybody's talking about shorting NVIDIA, you got to run away, man. You know what I mean? Because I know there's comfort in numbers, But do you want to be comfortable or do you want to make money, right? And that's a choice you have to make, you know. And a lot of people, if they're truly honest, a big part of what we want to be is part of a group and all that, right?
Yeah.
So if you want to be part of a group, that's fine. Share it in a video with all your friends, right? But if you want to make money, you have to be disciplined, you know, and you can't do that, right? Because you're going to get run over, right? And this is not a commentary on NVIDIA, right? This is just a commentary on trading.
Yeah.
Don't keep shorting something that keeps close to get a new high. You know, you feel like you're going to miss it. I've lost so much money doing that over my lifetime. You're not going to miss it if it's closing at a new high. You're not going to miss the short. If it's at a new high, you got to just get out and wait for another day. I know it hurts. I know it's painful, but you got to take your loss.
Yeah.
You know, learning how to lose is the single most important thing in this game, you know? Because I was in this book, Market Wizards, right?
Yeah.
People call me a market wizard, okay? And what I can tell you is if you want to define me as a market wizard, I'm here to tell you it has nothing to do with my ability to predict markets. Zero, right? I can't predict the future any better than anybody else, right? And anyone who says they can, by the way, is lying, right? They're scamming you. And we can have that whole conversation. But if I'm better than people at something, it's taking losses. If I'm a market wizard, it's because I know how to take losses better than most people. Nothing to do with my ability to predict the future of the market, where the S&P is going. I don't have any better ability than nobody does. And everybody will tell you this. Every good trader will tell you this, okay? Every successful, I'm talking about the real, I'm not talking about the guy who just made $50 million in Bitcoin in the last 4 months, right?
Right.
I'm talking about every long-term successful trader that you can read about in books and all that stuff. Tudor Jones and, you know, all these guys, they will all tell you the same thing. It's risk management. It's taking losses. That is what's going to make you a successful trader.
If you're currently working multiple part-time jobs, or if you're a student, the story of our next trader might be very inspiring to you. Kyle Williams is now a multi-millionaire who specializes in small-cap stock trading. When I spoke to him last year, he shared the early struggles when he was learning how to trade while in college. Just like all of us, Kyle had to sacrifice a lot of his time at a young age to commit to the stock market. Kyle's diligence in reading the charts and his introspective character led him to his first experience of trading with a consistent strategy. Alright, now let's learn from Kyle's humble beginnings.
I definitely would not have had enough to just immediately start. I would have had to save up for sure.
So you started in college with that $6,000 small
Yes.
account. Well, it's not small, but nowadays it's a small account.
Right.
How did that go when you first started trading with that $6,000?
Funny, because so the first couple of trades I took, one specifically, I'd followed like an alert, right? I started with Tim Sykes, so he put out this alert, and you know, everyone says don't chase alerts.
I've done those too.
Right, and of course, you know, little old me as beginner, like, I was like, yeah, whatever, I'm just gonna buy this stock with him.
Okay.
The worst thing it ever was it was a winner. It was a huge winner. I made like $450 or $480, I think. And I thought, this is amazing. Like I've always learned or heard traders who have that one trade that gives them the bug of like, this is incredible. Like I want to keep doing this. This trade was that for me, to the point where I thought I figured it out. And this was like 2 weeks in, you know, so naive.
Yeah.
That a week later, I'd pretty much given it all back. So it was a huge slap in the face, but it was a good slap in the face in the sense that from then point on to the next, call it, 6 to 7 months, I had dwindled that 6K account down to like 2,300. So down about like 70% or whatever it is.
So you were like slowly kind of taking these like losses, following alerts.
So I guess to clarify, so that once I started following a few more alerts and started giving all that money back, that pretty much stopped. I learned that lesson very quickly. All the other losses was just me trying to test things out, trying to figure out strategies. Sometimes to the point of even gambling, just, I think the stock's going to go up, and I just buy it, having no idea what I'm actually doing, right? The best thing I did, I just didn't take any large losses after that, like after giving back that $480. I never took any loss bigger than $100, $200, but it was like death by 1,000 paper cuts.
Yeah.
Right? It was like slowly bleeding every month to the point where like by the time I started 2017, I was down, like $4,000-ish, like 3,700.
So what made you decide to kind of, because in college, losing $4,000 out of 6,000, that's what, 70% maybe, or 80% of the account? What made you decide to keep pushing forward? Because you're in college, you're studying to become an engineer.
Right.
You have a future ahead.
Yeah.
Why did you stay with trading and trying to make this, this job, this potential career work?
Yeah, I think I found a passion for it that persisted through and persevered through, because I had thought about a lot of times, because totally during that period, there were definitely moments of quitting. There were definitely moments of what did I get myself into?
Yeah, what's the point?
Right. And ultimately, what I kept coming to was what would I rather be doing? If I'm not doing this, if I'm not going to try to give it the best shot and figure this out, do I want to continue engineering? No. Do I want to switch majors, which I eventually did. I switched to a finance degree. But even in the finance degree, I couldn't, at least at the time of what was out there, I couldn't see myself being as excited every morning as I was about trading. For context, I'm not a morning person. I would sleep until 10 a.m., 11 a.m. every morning if I could. And so me waking up, on the West Coast at 5:30 every morning to prepare was totally out of my comfort zone. But the love and passion I had for trading, what got me to do that. And I couldn't, at the time, I just didn't have anything else that was I could even think of having that level of interest in something like that. In college, you'd have to, tear off pluck hairs to get me to read, something painful to read a book for college. But for a trading book, I've read more books on trading than any other book topic ever. And I'm not a reader. I don't like reading.
And you even switch your major to do this.
Yeah. So it just was something what would I rather be doing? And I just kept doing it and persevering. So.
And obviously you made the right move.
Right. Yes.
Yeah. So you switch your major and you're trading that $2,000 account. What kind of got you to eventually to, everyone goes slowly, hopefully, red to green. How did you get to that point after having a $4,000 drawdown?
So once at my lowest point of that account, I had officially come to the conclusion that I need to just stop trading, right?
Okay.
To the point where it's clearly all of my trading up to this point has led to losses. And so I need to take a totally different approach of what I've been doing to have any kind of profitability, right? And so ultimately I came to the conclusion of I need to wait as long as I need to wait. I don't care if it's 1 week, 3 weeks, a month, 2 months, until I wait for something that I feel I'm so confident in of a strategy or so confident of a potential trade to take that instead of pushing myself to trade, I wanted to be pulled. I wanted something so good to be you feel dumb to miss the trade. It's so good. And ultimately I came across Fannie Mae, FNMA, which is, I think it's below $1 now in terms of trading. But back then in 2016 and 2017, it was around, I think, $3 or $4 or $5. And it had this pattern that played out every year or so. And I think it ended up happening about 6 years, not 6 years in a row, but 6 times over the last 2 or 3 years, where it would have, 30 minutes of straight buying, just perfectly, trendy morning spike, and then a full hour of straight selling. So it'd go from say break even on the day to up 30%, and then with an hour down 30%. So a full 60% kind of moved up and then down. And then that led to this huge kind of bounce move where it was you can see it on the level 2 and the buyers and sellers, where literally the selling would dry up and all of a sudden all these buyers start coming in, where it turned into a panic dip buy essentially.
Right.
And that setup but I didn't even know at the time, but I actually had been studying and watching videos on it. I didn't know it was going to be a setup of mine, but I had watched it enough times to understand this is a setup I can comprehend and know how it actually works in the market. And so when I saw that happen, I said, I've seen this before. And so I dip bought it and made $25, but back then in E-Trade, this is when commissions were $10 in and $10 out.
Okay.
They weren't free anymore. So I made $25, but paid $20 in commissions. I made $5. And it was.
But that was the one obvious trade you've been waiting for.
It was the first trade where I said, I think I know what's going to happen, and I was right, right? To the point where it gave me an essence of repeatability. It wasn't just this random buying or selling of a stock. It was wow, this has happened before, and it just happened right now, and it can happen again. And so that was really the first setup for me of this panic dip buying idea that got me to stay consistent, to actually have something repeatable versus just quote unquote gambling, buying because I think something's going up or selling because I think something's going down.
So this panic dip buy strategy, is that kind of the first proper strategy that you started following and growing that small account?
Yes, that was the first setup I ever really learned and got profitable with.
Yeah.
That really started growing that E-Trade account out of the hole that I was in. And ultimately, that's actually what then led me to learning how to short sell, because a lot of these panic dip buys that I was buying was from stocks that were up 100, 200, 300% over a few days.
I see.
Which led to that panic. And so that's what kind of, it helped me create this kind of, I guess, not diversified portfolio, but this two-handed, forehand, backhand strategy where it's like, okay, if I can short it before the panic comes and then cover my short and then immediately dip buy, like flip it, then it's like a 2-in-1 kind of trade. And those were the two setups that really grew my account then from back down under, call it down $4,000 back to then break even. And for context, when I was down $4,000, E-Trade was never been a good short selling broker.
Yes.
And so by that point, I did have one more, I guess, savings of $4,000 in my account.
Okay.
To where I had then used those, so I lost $4,000. I took $4,000 more and opened up an IB account.
I see.
And that was my short selling account. So I never refunded the E-Trade, but I just used that $2K or $2,300-ish to dip buy, and then the new $4,000 account at IB to short sell. So I just used those two accounts to then eventually get back break even and then onward up from there.
So you actually have dedicated accounts for each of the two strategies you were trading?
Yes, yeah.
Oh, okay.
E-Trade wasn't that good at shorting OTCs. In fact, I don't think they even offered OTC shorts, but IB did, Interactive Brokers did. And you have to be 21. I think right when I turned 21 in February of 2017, I funded the account because I knew that was like perfect aligning of like realizing, I can learn to short these dip buys that I've been trying to buy.
And early on, were you trying to learn to scale in, or was it just one entry, one exit for all those strategies?
So I was under the PET, so I didn't really have the luxury of scaling in, right? So the panic, and that's kind of why the panic dip buy worked, because even if I had the ability to scale in, the panic dip buy it's such a quick thing, like the turn from a panic into a bounce. It's such a quick. It really happens in a matter of seconds to a minute at most.
Yeah.
And so there really is no option most of the time to try to like slowly scale in. I mean, you got one entry kind of thing. So it worked out great because under PET, that's all I really could have, which was buying once and then selling once. And so that's really what it was. I'd try to buy that bottom, have it bounce, and if it broke that low, I'm either selling for a loss or I'm selling into the bounce for a gain.
Yeah, so since you have two accounts, you could trade 6 day trades in 1 week.
That's also why I wanted to open up, because it helped me. I knew even if E-Trade, let's say E-Trade did offer good short selling.
Yeah.
At that point, I'm still only limited to 3 trades per week. So opening another one and then getting 6 was again another strategy that I wanted to use just to help lighten the impact of the PDT for sure. Yeah.
And I know you were trading in college part-time. So what was your kind of like your routine like while in school to trade?
Right. When I and I think being on the West Coast helped me a ton.
Yeah.
Once I realized trading was exactly what I wanted to do, and that was going to take up most of my time, I immediately then structured around the market hours. So if the market opens at 6:30 or Pacific Coast time, I would try to trade from 6:30 to the close. That wasn't always the case. Sometimes I had to pick classes that were like midday. So I'd pick classes at like 9, 10, or 11 where, there's nothing really going on in the market. I'd always make sure to keep the first hour and the last hour of the market open, because that's usually the most volatile or just important times to watch, right? And then if I had to, I'd pick like one class middle of the day. But most times, in most semesters, I was able to pick classes that were after the 1 o'clock. So the market would close. I'd pick classes at 2 o'clock, 3 o'clock, 4 o'clock. Sometimes I'd pick night classes like 7 o'clock and then end at 9.
Yeah.
And that's kind of how I did that. So call it Monday through Friday or Monday through Thursday, I do pick afternoon to night classes. Trade in the morning, and then on the weekends I would either do homework that I've kind of slacked on, or I would, or then weekend nights I would then work the part-time job. So like Friday night, Saturday night, Sunday night, or even Monday morning. We had brunch sometimes. We serve brunch. That's the times I would work my part-time shifts at the restaurant. So.
Coming up next, I want to share with you a very insightful conversation about trading drawdowns and risk management. Meet Mike Bella, the co-founder of the top proprietary trading firm S&B Capital, as well as Jeff Holden, the head of trader development at the firm, who has mentored many pro traders. Together, they'll be breaking down the correct mindset and how you should approach trading when you're going through losses and inconsistencies.
And us at a firm here, let's say you do have a trader who is in a streak of drawdown.
We have
What
some.
do you
We
do?
have some of those.
And how do you help them get over that?
Yeah, so it depends on the trader.
Yeah.
So we did very well in 20 and 21, and 22, the first part of 22. I mean, really, really well. That was a lot of fun. Traders performed extraordinarily. When the market changed, when the Fed started introducing rate hikes, there was a different market regime. And we tried really hard, really quickly to explain to traders that this was a new market regime and we needed to trade different strategies. What worked during 20 and 21 and parts of 22 was not now going to work in this new regime. We were going to have to short a little bit more, not buy pullbacks, that wasn't going to work, lean on our shorts a little bit more, and we thought the market would pull in significantly because of that. And so we had traders who had drawdowns because the market was different. They had been, just stars in that high volatility marketplace, but now in a interest rate environment that was rising with no clarity on when interest rates would stop rising, you had a completely different marketplace and a completely different market, and so you had to change your type of trading. And so we had traders who drew down, and so a couple of the traders who drew down, we needed to get them back to being consistent. And two traders I'm thinking about specifically. These traders, they drew down a lot. They drew down over 7 figures, and we actually had them start working with Lance on a very specific entry and exit system that would allow them to be more consistent with their trading. We changed the strategy. Like we when people aren't doing well, we don't sit around and pat them on the shoulder and say things are going to get better.
No.
They're not going to get better unless they change.
They have to adapt.
They have to change what they're doing. They have to trade things with edge. Buying pullbacks where they made millions of dollars with in 20 and 21 and 22, now was not working. And so we pointed out, like, here are the very specific ways that you need to change. Here are the very specific entry and exit nuances that you need to adapt that we think will work for you, that you need to incorporate. And so we did with that. Some other trader I'm thinking about needed to stop trading options so much for lots of different reasons. But the secret sauce is getting guys to be taking the strategies that were working in this different market regime and not just do the same thing. Dr. Steenbarger wrote a great post about this recently, about how traders who are trading momentum and expecting to make money the way they did in other regimes are going to continue to lose money if they don't adapt, because when volatility is low, like it is now, or lower, like it is now, certain strategies just don't work as well. And you want to be more targeted if you're going to use those strategies at a minimum.
So during these times where you are helping the traders who are struggling, we talked about risk bumps when they're doing well. Do you lower their risk when they are kind of trying to figure out new strategies to fit the current market environment? Yeah,
it's like starting anew. Just because you were a star trader in another market, you should prove that you're a good trader in this new market. I think one of the things that we could have done better at the firm was, in a theoretical environment, and sort of in the best case scenario, as soon as the Fed started raising rates, we should have just cut everybody's risk back to as if they were beginning traders. That would have actually been, from a firm's perspective, the right thing to do. And just say, this is a new market, prove your edge in this market, and let's build new businesses in that market. We didn't do that, and so some of the traders definitely drew down. I would do that differently. if I could.
Yeah.
But yeah, I mean, risks get cut, and there's more of an emphasis on being consistent again. There's certainly more help. We provide traders, like sometimes we have to provide amnesty. So sometimes the trader's down a lot of money, and they wouldn't necessarily make money until they made back all the money they were down. And we'll say to them, you know what, if you make money this month, we're not going to pay you out at above 50 or above, but we'll pay you out at 20%. And you will make some money as we're going along, and we'll work this off together.
Yeah.
So we'll do things like that. But yeah, it's just be consistent, make money in this new market, find your edges, and we'll build from there.
You'll hear people talk about a drawdown playbook a lot. For a trader that's in a drawdown, they'll have a specific playbook, and it's really kind of
safer.
It's really focusing on what is my edge in this environment right now. Okay. And you'll see the specificity that occurs, because even though it's not your own money, we're on the desk to make money. Yeah, we're on the desk to be competitive. We're on the desk because this is a place where the person next to you is a high performer and the other person next to you is a high performer. They're elite level performers. And the type of people that do well here just don't tolerate coming in and not performing well. You can't, it's just in your blood. You can't really tolerate coming in and not being at that level. So you'll figure out how to get that drawdown playbook in place, which is, I'm only going to focus on my very specific edges, the top trades for me that are working in this environment. And I'm only going to allocate risk to those. Once I get my rhythm back, once I get a feel for the tape, once I recognize that I'm trading with consistent edge again, then I can start to bring those other strategies back online. But you'll see that a lot, and you'll hear that discussion a lot for anybody that's in a drawdown. I'm just, I have to get to my drawdown playbook. And it is that like really specific version where you're just letting the market show you opportunity.
Yeah.
You're showing up every day, you're still working the system, the process that you have for putting yourself in the best position possible to make money every single day, but you're just waiting for those really key moments that show up. And even as the market environments shift, those moments still tend to show up. We saw one even yesterday into today with the big gap. I mean, that was an environment, that's a playbook that not a lot of traders have been able to pull out for a period of time, but they were able to do that last night into today, which put them in a really good position coming into the day today.
I hope you've been paying attention to the pro tips these successful traders shared with you. So the key to succeed in trading is actually no longer a secret. Maybe the only secret left is that you need to smash the like button and you'll become the next Lamborghini millionaire day trader. Another important aspect that can help a lot for a developing trader's career is to be part of a positive trading community. So I want to give you guys a quick snippet of what the Humble Trader Community Discord looks like. But no worries at all if you're not looking to join. You can still enjoy all the free educational content here on the channel. I've included the links to all the podcast episodes featuring the guests in the videos, so feel free to learn from the experience and strategies of these successful traders at Humble Traders Podcast. Now, this is a quick preview of what the Humble Trader community members have access to on a day-to-day trading day, from pre-market trade planning to live guidance during the market hours. If you're interested, then you can watch this walkthrough video led by our head trading coach, Adam.
Hello and welcome to the Humble Trader Community Discord. My name is Adam and I'm one of the head coaches here at the community. The Discord is a great place to connect with other traders, and today we're going to be going through all the key resources and how to navigate through each and every resource available to you as a Humble Trader community member. So now that you're on the server, you're going to be greeted with the welcome page. And we can see here a little bit about the community, as well as the community guidelines. So it's very important that you take the time to read these guidelines. And then following that, we can see the community schedule. So meet the HT team. The team consists of Shay, Adam, which is myself, Orain, and Hank. And we can also see the chat room schedule here. So this gives us an idea as to how the chat room is actually ran. So from 7 a.m. to 8:30 a.m., this is when we're doing our research and planning. At 8:30 to 9 a.m., we go live, and you can join the Zoom call and see our coaches going over the pre-market watch list, creating the game plan, each and every morning. So make sure you're checking that out at hashtag #daytradingonly as we post a link to the pre-market planning there every single morning. Following the pre-market planning, we will then post the watch list for everyone to see. So we go through how we're creating the watch list in the morning, and then we actually post that watch list out in a nice text format for everyone to see. Then at 9:30 a.m., this is when we're the most active, from 9:30 to 12 p.m., and that is EST time, as we find the most opportunities here. And then from 3 to 4 p.m., it is power hour, and we also tend to find some great opportunities at this trading time. Now, moving away from the start menu, another place we can look and find these events is in the events tab. So each and every event we have will be listed in the events tab. And we can see we have pre-market planning with Arain tomorrow, and then on Monday, we have another pre-market planning with Arain. Following that, we have a pre-market planning session with myself. So this is where you want to look to see where these events are. And you can also become interested in these events so you're reminded when they do arise. And then once again, we have the Zoom link here, so you can click on this link to join that pre-market planning or whatever webinar or event is going on. Now that we've seen where to look at our message requests and how to communicate with others on Discord, let's actually take a look at the announcements tab on the Discord. So under start here, we can go down to announcements, and this is where we're going to see all of the HT community announcements. So it's really important to keep an eye on this for any big events, webinars, or important updates that we have within the community. And we can see here we have an upcoming event, and here are some dates. So really important to be taking a look at these announcements so you are aware of what's happening and getting the most out of your membership. Now the next section under announcements is our member frequently asked questions. And here is a great place if you're a new trader to get familiar with what that Discord has to offer and some of the common questions that we get from new and experienced traders. So it's a really great place when you join to come into here and take a look as to what's happening in all of these frequently asked questions. Following that, we have webinar registrations. So this is another really great tab to be looking at, as this gives us the whole game plan and calendar for the upcoming month. So we can see all the events we had in May here, as well as the upcoming events for in June. So this calendar is always updated and really important to take a look at this so you know when all the webinars are. In the Humble Trader community, we have two types of watch lists. That is our daily day trading watch list, as well as our bi-weekly swing trading watch list. So every day we go into our pre-market planning call, and after that call we create a watch list on what we talked about. So we can see here we were looking at SPY, FTNT, we had mRNA on Sidewatch, Burl, FL. So this is where you can see exactly what stocks our team is looking at each and every morning. And it's important to know that this is posted before the market open. So it lets you have an idea as to what we're looking at before that bell rings. And below this is the swing trading watch list. So we can see all of our swing positions here, as well as the ideas behind them. And we also offer a really awesome submission box for our swing research for our members. So if you have a swing idea and you come down to the swing trading category, you can actually submit your research with this form for our coaches to take a look at, review, and potentially put it on the watch list. Now, as a new member, you should be looking at the HT Academy. And any questions you have, you can get them answered here in the Academy discussion. Following that is our new Trader Lounge, and we recommend everyone to actually introduce yourself upon joining the server. Below that is our new Trader Welcome Sessions. So everyone is offered a 15-minute session with one of our coaches to get a better feel as to what's going on with the community. So if you're still lost after this walkthrough, feel free to actually book one of these new member welcome sessions. After completing your new member welcome session and you start to have a better feel, we highly encourage you to actually take the next step and book a one-on-one coaching call. So these one-on-one coaching calls are made to allow you to connect with your trading coach and get that one-on-one guidance that you need. These calls are meant to allow you to ask any question that you have. So you will be in this call with your coach, just one-on-one through Zoom. So make sure if you do book one of these calls, you come prepared with some questions to go through and really make the most out of each call. And following this is our Trading Partners program. So if you're looking to connect with more like-minded traders and be in a more specific group, this program really allows for that. So another great feature we have within the community. Now that we have gone over all the resources available to us, let's take a look at some of the actual trading resources within the Discord. So the day trading room is where the majority of our general trades are taking place. So any headlines going on, this is where you can communicate your stock ideas. But if you notice, we actually have a few rooms following it. And these rooms are our strategy specific rooms. So on top of always looking at what's moving in the markets, we've really become specific at the strategies we look at. And we can also notice that in conjunction to having the day trading and strategy specific rooms, we have the same charts and P&L. So this allows for us to be specific, looking at a specific strategy throughout the day. And then we can see the corresponding charts and ask questions and submit our charts to our coaches in the charts and P&L room. Now the trading resources section on the Discord is broken up into a few different categories. So the first thing we have is our trading lingo. So it's really important you understand all these lingos as we're constantly talking using these terms in chat. Following that is our day trading resources. So as I mentioned, we focus on specific strategies. And we have created cheat sheets for each and every strategy. So we can find all the cheat sheets here in the day trading resources, as well as the HT trading journals. So we have a Google Sheet, as well as my own template, which is more of a written approach to journaling your trades. And following that, we have our swing trading resources. So here we can take a look at all of our key resources when it comes to swing trading. And finally, we have our recommended brokers and trading tools. And this will conclude all of the features of the Discord community. I know things can seem a bit overwhelming, but it isn't that bad. You're just going to get on the server and start going through the rooms. If you have any difficulties along the way, feel free to reach out to our designated support staff or any of our community helpers.
If you want to watch the full interviews with these Millionaire Pro traders, then check out the playlist over here.